Hey everybody, it's me, Gregory Mannarino, back for my post-market wrap-up on this lovely day. And it was lovely, and I'm going to tell you why it was lovely. What is the day? Oh, Tuesday, March 27th, 2018. I know I'm in this kind of casual outfit here. I got to get out the door in a minute, but I wanted to get this video out. The bell, the closing bell, like 10 minutes ago. Let's go over this day. It's insane. And something else that is super, super important. So you want to talk about a wild day? Well, you got it. We had a stock market, which was all over the place. The Dow Jones Industrial Average was higher by 250 points at one point, down 400 at one point, and overall I think it closed down about 350 or so, pretty close to the lows of the day. But that's not even, again, it's not the real story. The Confederacy of Idiots over there, they're not going to tell you this. What did we just find out? Well, the Federal Reserve, they just raised rates. They just raised rates. However, since the Federal Reserve, Powell, opened his mouth, so much cash has gone into the bond market, well, one way or the other, that rates have dropped significantly. So what does that tell you? What does that tell you? We have a world central bank that is, wants to raise rates, telling the market is going to raise rates, but meanwhile rates are going down on their own. Well, why is that happening? People, I don't know another way to put this. This should be clear evidence to you that the Fed has lost control. There is no doubt about it. Now, earlier today, we had, again, epic bond buying. This was an attempt, in my view, at that point, to try to prop up that bond market, creating an environment of a risk. And that's exactly what happened. Stocks went up. Then we got almost what I would say, I wouldn't say a complete panic sell, but worried selling of stocks, and then we got the safety play, cash moving into the bond market. You see how this works? Now, I had to navigate this market like a freaking fighter pilot. As most of you know, and I posted this all over my websites, I opened up a long position on SPY earlier. I bought calls, then I hedged that position. Again, I posted it all over the place. Towards the end of the day, about an hour before, I ended up closing my long and go completely short. And after being all over the place, I did finish the day in the negative, about $88. The only reason why I was able to pull that off is because I'm sitting here in front of my computer, otherwise I would have been down, I don't even know how much, if I didn't kind of get a little bit fancy. So, anyway, that's how it played out for me. But it's kind of funny. It really is. You almost have to, you don't know if you have to laugh here or if you want to cry here. Pick your poison. We have a rigged market, is completely managed, and the Federal Reserve seems to have lost control of the bond market. I mean, what more proof do we need? The Fed is telling us that they're raising rates, that they actually, raised the federal funds rate 0.25%. You remember all that? Well, guess what? Rates have dropped since that time. Wow. But you won't hear that probably from the Confederacy of Dunces, and you know who they are. Anyway, this market, if it were real, would be nowhere near where it is right now, and you know that. We have valuations that are in the stratosphere. Bubble territory, no doubt about it. You won't hear that either from the Confederacy of Dunces. But those are the facts. We haven't seen valuations like this since the dot-com bubble. But no. They want you in stocks. They think stocks should be going higher here, despite the fact that we're getting, round of bad economic news followed by another round of bad economic news. GDP nowhere near where it's being predicted. Anyway, interesting day, really, for me. It should be for you, too. And if you get a minute, really take a second and go look at that chart of the bond market, what they did today. Initially, again, it was being propped up to try to push people into stocks. It worked. Their strategy worked. Stocks were higher. Then reversal, and I mean hard reversal. Cash came out of stocks into the safety of bonds, pushing the 10-year yield down to 2.77, I think it is right now. It's insane. And I believe when the Fed raised rates, it was 2.85-ish. That's a tremendous move. It really is. Anyway, let's see what happens tomorrow. In fact, I can't wait to sit here and do my my morning report. It's going to be interesting. Watch those futures overnight, too. That's going to be interesting as well. All right, with that said, see you in the morning. Over now.